right, guys, welcome back. Welcome back. This is Trade with Ola, and I've been getting a request for me to actually show you guys how I mark out my support and resistance level using Malaysian SNR. Now, this video is going to be very crucial, very important, and obviously very educative. One thing I want us to understand, I think I was on X a few days ago, and I saw someone posting some certain information about people who trade Malaysian SNR. And I think people always align Malaysian SNR traders with the alchemist traders and all. I feel like, yeah, they both have the same concept, they both trade the same concept. But if you as a trader is what determines whatever concept you're trading. Just because I work with Malaysian SNR is because I've found out that they have tangible information that actually help my trading or improve my trading. So when we talk about Malaysian SNR, we're just talking about Malaysian support and resistance. That's just the meaning, support and resistance. The same thing SMC traders, price action traders, whatever you call yourself, trade support and resistance one way or the other. Malaysian SNR is also doing that. But the only advantage which I have seen from Malaysian SNR is that it has a good and a very accurate precision level when you're marking out your key levels, which is what we're going to learn today. So let's just dive straight into the video and let's see what we have for today. So when we come to me analyzing the chart, I'm going to be using Ethereum USDT because funny enough, I didn't do any analysis on Ethereum USDT this week. I'll show you guys the trades I took this week, but I didn't work on Ethereum. I didn't even look at Ethereum USDT. I actually just was trading other pairs. Okay, so let's look at ETH first. Now, let's say I want to do my analysis and I want to spot out my support and resistance level. Okay, my key levels. I always work with MSNR, and then you know that in MSNR we have the open close level, we have the A-shaped key level, V-shaped key level. So for me, I work with A-shaped key levels, V-shaped key levels, and other blocks. Okay, A-shaped key levels, V-shaped key levels, and other blocks when I'm marking out my key levels on my higher time frame and my 4-hour time frame also, which is also an higher time frame for me. Okay, so how do I do this? Now, as a beginner, I would advise for you to switch immediately to your line chart. Okay, so you can see I am on the weekly time frame and I have switched to what? My line chart. So for those of us who don't know how to work with line charts, you just come to this section here where we have bar styles, and then you click on it and then you select your line chart. This one you have line, and then just click on the star. It adds it to your favorites and then you can work with it. Okay, so now that I am on the line chart, I believe if you have watched my previous video, you already know what I'm about to talk about here. But if you've not done that, please go back to the previous videos, the beginning, the first few videos we started on key levels, and watch them very well. Okay, so for this one here, we have a V-shaped key level. Okay, so we have a V-shaped key level here. We also have another V-shaped key level here. So I'm going to pick up my square tool, and then I can mark a zone. When I mark this zone to this point here, and then I go back to my normal chart, you can see how price came back to that V-shaped key level on the weekly time frame and reacted. Price came back to that V-shaped key level and reacted. Okay, so when I am marking my zones, you see me mark the tip. Okay, so when I started as a beginner, I also worked with using lines. I can use a line like this to just indicate such, okay, instead of using zones. Okay, so I usually use lines, and when you come back to your chart, you can see the precision of how price reacts. But why do I use zones? I'll show you guys shortly. Okay, why do I use a square zone? So if I'm to mark my key level here, my key level where price is reacting, creating these buy opportunities you are seeing here, this bullish trend you are seeing here. It started from this key level here. There was a V-shaped key level here, which if you indicate this with your line chart, and then you draw out your square tool back to that zone. Now, once you put back your line chart, you can see that there was a key level here. Price came back to retest that key level and reacted off that key level. Okay, so we have about 2 levels here, but this one here, this tiny ones we have here, this is my fresh key level here. This is my fresh V-shaped key level here. So if I zoom in, you can see it. Okay, so I always, when I'm using this my square box, you can see I have my border. I have this my border radius on my square box. So I always make sure that my line, the red line you're seeing, rest on the tip of that V-shaped key level. Okay, and then the remaining body now I can take it towards the wick, or I use the extensive wick here. This zone also is also valid. Okay, so this is how I mark out my key level. Okay, so this key level here, this key level here, they're both valid. can work with any one of them. You can still put it here and decide to take out or to take all these zones here to say, okay, I want to secure all these zones here. You're correct. But I will just pick only to this zone here and then go back to what my 4-hour time frame. And then you can see that you have what you can see that you have a reaction of that zone. Price push up came back to retest the apex level here before price started moving to the upside. So this was where price came to on the first touch of the reaction. Okay, so that's how to mark your zones on the weekly level. Now let me show you how, after marking this key level here, let's look at how I marked this other key level. How did I spot out this key level here? Because there's definitely a key level here that we don't know about. So if you switch to your line chart, you can see that you have a V-shaped key level. And when price breaks that V-shaped key level, this support turns what? Resistance. So this is what? SBR. Okay, so what do? I can use my square tool. I'll make sure my line is on that square tool, then I'll mark out that zone this way. So this one here now, you see the way I mark out my SBR zones or RBS zones. This line, this red line, will sit on the tip. You see that this red line here, I want you guys to see something here. This my red line sits, this lower red line sits on that tip, and then I mark out my zone this way. Okay, so when I switch back to my line chart, you can see I have something like this. So I've not had price come back to this my key level here. We also have this key level here, but you can see that this price itself did not reject off this key level. It was this candle here that rejected off this key level here. So what do I mean by that? So if I'm to mark this key level here again, you see I'm marking the close of the first candle, and then I'll extend. And that was where we had this weekly reject weekly here. And then if you go back to your line chart, you can see the same thing I've just marked here. Okay, that's how I mark my key levels. Okay, so after marking these key levels, when you're marking something like RBS or SBR key levels, you can work with the whole zone like this if you have a zone like this, but you can also just adjust a little bit. And as price reacts from that zone, you can just keep on adjusting till you get to your other block. Okay, so after marking this key level here, you can see that price started buying from this point here. When price got to this point here, first reaction of this point here, price reacted. This was weekly rejecting weekly. That's my first confirmation. Weekly rejected what? A weekly key level. Now once weekly rejects weekly, I want to scale down to my 4 hours, not the daily time frame. Now when I scale to my 4 hours, you can see how your zones now look like proper what? Support and resistance zones. Okay, they now look like what? Proper support and resistance zones, which can help you very well to understand what you're doing in the financial market. Okay, so this is just my resistance zone, this is just my support zone. Okay, so now when I go back to my 4 hours, what am I looking for? You popularly will hear this to be your what? Market structure shift, but we call it a breakout. Okay, it's a confirmation in MSNR concept. Okay, so we're looking out for a breakout. Now where's my breakout? My breakout is the last A-shaped key level before price touched what? Your zone, and this is the A-shaped key level here. Now you know that, oh, this breakout level here, which I can indicate as a market structure shift also, is really far away from where you have your what? Your zone, where you have your first touch of your zone. So you can still trade on all these zones here, but they are very low probability setup. You have to be very careful, and then this is where your draw on liquidity concept will really help you. Okay, so now if I'm to explain the draw on liquidity concept and how I mark out my zone and get my directional bias using draw on liquidity concept, you're going to see me do something like this. I want to see price, because we know that whether you like it or not, we know price to give us this type of price action most of the time. Okay, we have this, price gives us this, comes back to a PY and push. Okay, this is how we tend to want to see structure, right? Good. So whenever price takes out external range liquidity, we know that price must pull back into internal range liquidity. That's the same thing we have here. Okay, when I had this, okay, price took out all this external range, give you inducement, and then come back for the internal range, and then pull back again to target this external range. Okay, so we have here to be, this place here is our external range liquidity. So this is my DOL, drawn liquidity, and then you see this place to be my internal range, which is your order block, apex level, breaker block, or any other key levels within all this internal range here. Okay, so that's how we work with our drawn liquidity. So when I use this concept, I now start to understand where I get my directional bias easily, where I should be buying or selling in the market. Okay, and then with the overall concept that I know the overall trend. Now when we look at a bullish trend, we always look out that, yes, when I'm working with a bullish trend, I always know that the what external range liquidities or the external range key level will always fail for a bullish trend. For price to continue to move up, the external range liquidity must always fail. That's why if we repeat this same scenario again, this external range liquidity must fail because price must take it out for us to consider this to be what a bullish trend. Okay, so that's for us to understand on that. So how do I now mark out these key levels here? Now on the 4 hours, okay, you can see that when price started pushing to the upside, I wait to see for any break of structure, any break of structure. So you can see that price broke structure here on the 4 hours here. This is a drawn liquidity. Price swept this high, broke this structure here, right? So when price broke this structure, I would want to see, I'll be looking at the previous existing candles that have been produced on my left-hand side. I want to see key levels within those candles that have been printed. If there's any key level where price can get to and react, I will mark those key levels out. So if you look at this here, I have this A-shaped key level here, which is this order block here. I have this A-shaped key level here. I can mark out this zone, expecting that when price comes back here, price might pull back. Okay, but I know my overall trend to be bullish, but not yet confirmed because of we need to see price take out this previous high here. Okay, so then there was a key level that definitely made price react from this point here down back to this order block here, this V-shaped key level here. Price came back to this V-shaped key level here and reacted. Are you seeing that? So this is a V-shaped key level. So price took out external range and pulled back into internal range. Price will not just start pulling back into internal range. No, it will move itself to a specific key level. Now, when you don't see key level, you can always extend to your previous chart to see to your previous data to see if there was any visible key level. If you don't see any visible key level, please avoid it. Wait for price to come back to a specific key level that you know that is there and see how price reacts off that key level. So I would have waited for price to come back to what either this order block or this V-shaped key level, which you can see here. There's a V-shaped key level there, and that's how I marked this zone here. Right, you can see the precision of instead of using order block, price came back to what your new invalidation level. This is a new invalidation level. Okay, so this is some people call it apex, but it's called new invalidation level. Okay, so this level here is the extreme level where price can come to react on this V-shaped key level and start pushing up. So how do I now trade this? I know that when price takes out external range, price will pull back into internal range. So I'm now looking at, okay, well, price has gotten to internal range key level. Let me see how price reacts, and then if price reacts properly and give me a market structure shift, I will continue to buy till I take out this external range high here. So when do I now start doing that? After doing this analysis and price comes to this key level, I will now get my confirmation on the 30 minutes. Now, why do I have, you look at my time frame analysis here, I have weekly, 4 hours. I don't have daily. Some people say it's weird. And what are you doing? Why don't you have daily? That is how I trade. Everybody knows. Anything that works for you, please work with it. I'm just sharing my own information with you guys. Okay, so I have weekly 4 hours, 2 hours, 30 minutes, and 15 minutes. Now, once I use the weekly to get the overall trend, I use the 4 hours to get my drawn liquidity concept. I can use 4 hours and 2 hours to get my drawn liquidity concept. So let me show you something here. You can see that if you are not seeing the structure properly on 4 hours, scale down to 2 hours, and you can see that we have a break of structure here. You can see that the dual concept, the drawn liquidity concept, is actually very clear on the on the 2 hours. So sometimes if you don't see a point of interest where price reacted from here on the 4 hours, scroll down to the 2 hours, you definitely see it. Okay, so price might be using this breakout block here, but I'm not interested. I don't like all this type of zones. I prefer my strong key levels like A shape, V shape, other blocks. Okay, those are my strong key levels that I love to work with very well. Okay, that work for me. So with this being said, price pulls back into internal range. I will now scale to my 30 minutes or 15 minutes time frame to start looking out for what a reversal concept. Okay, so let's look at it on the 30 minutes here. Let's look at that on the 30 minutes. Okay, so this is where we are. So on the 30 minutes now, price got to this zone here. Okay, so I am looking for a market structure shift. I am looking for a market structure shift. Now, look at something very interesting here. This was the first touch of that zone. Okay, so we're trading off this zone first. So this was the first touch of that zone. So when price touched this zone, boom, I'm expecting a reaction, and I want to see price will take out this level here, right? Good. So when I see price doing something like this, price tapped here and then broke this previous high here, giving us what a market structure shift confirmed, right? Beautiful. Now, on my best concept, I want to see what this is a break of structure, right? I want to see a proper inducement. You can see that price did not give you a proper inducement. This is not a valid inducement. A valid inducement must take out When after price broke structure, a valid inducement must take out the previous high, the wick. I don't look out for the body. This candle must take out this wick before I confirm this to be an inducement. Okay. So if we did not do that, I'm not interested in this trade. And you can see that if I had probably used my new invalidation zone here as entry, I would have been stopped out. A lot of us will say, oh, they want to use this order block or breaker block zone here. Okay, and if I had used this breaker block also, I would have used this breaker block because it appeared before my invalidation zone. So I could have used this breaker block here, do you understand, as my entry, and I would have been stopped out because my inducement is not correct. Okay, the inducement is not valid. Okay, so I wait again, and then you can see price taps the zone again, gave us what? A market structure shift again within here. Okay, this is like an internal structure, but it swept this level here, swept this liquidity here, and then broke here, and then gave us what? A market structure shift, right? Immediately gave us what? Inducement. And then what? I can validate this to be an inducement because it took out the previous candle that broke the structural high. So this is my inducement here. So you see me do something like this, inducement, and then I'll be looking for what? The closest point of interest where I can take my entry, right? So if I don't see any order block like that, so some people say this is their order block, some people say this is their order block, some people say this is their order block here. I would prefer to work with what? The new invalidation level. Okay, I would prefer to take my trade from here. Okay, so you see my entry level, I'll be looking out for an entry here. Okay, why? Because the other blocks here are not clear, so I take from my new invalidation levels. Okay, so this is, I'm going to talk more about entries very soon. Okay, so that's how I will continue to take my trades till I take out what? The drawn liquidity. So let's look at, let's see if I was to take any trade set up here. Okay, let's look at this one here. Let's look at this one here. And a lot of people always get confused here, that they'll be like, oh, okay, so we have a break of structure here, right? You can see that there was no inducement. Price came back down, mitigated this breakout block, and before creating the inducement, taking out this previous high. This was, everything here was the inducement. So this was what validated that inducement level for me, right? So you can see it's inducement. And mind you, this break of structures had a sweep of liquidity, right? Now, where will I take my entry from? After price has mitigated this breakout block, I'm not going to take it from this order block. I'm going to take it from this new invalidation level. So this new invalidation level here is where I'm going to take my entry from. So this entry here, that's my entry. Okay, so some people will say they'll take it from this other block zone and maybe put that stop loss below here, they would have been wicked out. But taking it from the new invalidation level is because I'm not seeing any valid order block. This order block you're seeing here was mitigated here. I mean, this breaker block was mitigated. So this order block is not valid. So you pick what? You pick the new invalidation level. Okay. So and then your stop loss will be below the wick of the invalidation level candle. Okay, below the wick. And that's why you see my trades looking like this. Okay, so anytime you don't see me take trades from order block or breaker block, I am using the new invalidation level. Okay, especially for continuation, because this is a continuation setup. Okay, so are you seeing that now? So that would have been my first trade, giving me about 1:10 max. I usually get 1:10. Okay, so after this again, we had what? A break of structure. Now, mind you, I don't know why I'm giving all this information for free, but I'll just let it slide. Let it be out there for you guys. Now, I'm going to generate a video for you guys where you know which break of structure to work with. Now, look at something here. This was a sweep of liquidity. Price broke first structure, second structure, third structure. Which one will you validate? Because there's not been any inducement here. That's why I won't have used this breakup, this first one, this last one, the third one. Why didn't we use this one? Why did price come back to use somewhere around here? Or this one is even, this was where price used. Why? Because probably there was an inducement level. So let's see. Let me see how this trade would have worked out for me. So for me, I would have waited to use this breaker block zone here. That would have been my entry zone. I would have waited to use this breaker block zone. I can use this one too, though, but I would have loved to see an inducement because I wouldn't have taken this trade without an inducement. And if I mark out this breaker block, you can see price taps that breaker block zone and then pushes out. So you can see that breaker block. Okay. So, but naturally, I would have even preferred using the first to be safe. Always use the first break of structure. That's my rule. I use the first break of structure. I know that we have multiple break of structure, so I'm working with the first one. Okay, but there was no inducement in this whole move here. Everything you are seeing here, this is, some people say this is a valid inducement. For me, it is not a valid inducement. This was the candle that broke structure. No other candle swept this candle, closed above this candle. So this inducement here is not valid for me, right? Now, let me now show you guys another setup that would surprise you guys. Okay, so some people will say, oh, apart from that, you notice that this was a sweep of liquidity here, right? Do you understand? Sweep of liquidity. Now we had a break of structure here. Okay. Now this break of structure is based on the line charts. There was a break of structure here. Now once I see something like this, some people say, oh, there's no actual inducement, but there is an inducement here. And then you can see that some people take this trade here, this new what invalidation level. So you take it from this new invalidation level, and then you see price comes back to that zone, you tap, and then you are buying. Okay, so for this type of setup, you will not understand. A lot of you will not understand how to take this type of setups. Okay, a lot of people. Okay, that's what most of those APA traders trade with. Okay, they trade with invalidation X, new invalidation, um, using QM and all those type of things. Okay, so but they are all point of interest you can work with. Okay, so this would have been a setup for me that take I would have taken it with all mind. Okay, you can see price extended to this point and still hit our take profit. Okay, so and then if you look at this continuation here, if I'm to take a continuation entry here, look at, so you can see here we had sweep of liquidity, a break of structure, but no inducement. But if you notice something, some people say no inducement, but there is an inducement. Why? Because let me remove this here. Why? Because look at it. There was the first break of structure. One, look at it on the line chart. It will tell you the story better. That's why line chart is very powerful, guys. This was the first break of structure. This was the second break of structure. This was the third one. This was the fourth one. So there are plenty break of structure there. Which one are you going to focus on? The first break of structure should be your focus. If it is not a breaker block setup, okay, you can see after this break of structure, there was a mitigation of the what breaker block zone. So you know you're not using any of those breaker blocks to take your entry. It is what the other block or what the new invalidation level that you work with. Okay, so price comes back to my price gave me my inducement clear. So what happened? I can work with this order block here, or I work with the new invalidation level. Okay, but since I'm seeing a clear order block, this is a clear order block, I will take it from my order block zone. So you see me take from the order block zone here. So if that there was no other block, I'll take it from what? The new invalidation level. Okay, so that's how you see me take this type of trade from here. I'm going to show you guys a current trade I am in right now. I'm coming entry. Okay, so that's how I've been taking this trade. Now, the major goal about this video is to show you guys how I'm able to get my directional bias. Can you see how many buys I've been taking? Because I already know my drawn liquidity concept already. I know where I'm looking at for price to head to on the 4 hours. See, everything I'm doing here is on the 30 minutes. But if you look at it, it is just a 4 hours break of structure move. It is just price action in what 4 hours. But I've been able to catch about how many entries? About 3 entries in that same line, just to take out this what external range liquidity here, using drawn liquidity concept to get my directional bias. That's why you see that I keep on what buying till I take out what the drawn liquidity concept there. So I take out the old drawn liquidity there. Okay, so you can see how we mark out our key levels and how I start to trade. Okay, and mind you, the trend has not been confirmed yet though. This market has not been confirmed to be bullish yet. That's the funny part of it, because we've not taken out what this level here. But I'm still able to catch trades because of what my draw on liquidity concept is confirmed. I understand my draw on liquidity concept properly. So for a trade like this, you see this one give me 1:10 or so. Yeah. Okay. So it's also around here. So I've closed around key levels. I'll also teach you guys how to take profit levels. Okay. So take out this level here and then price push back down. I'm not interested in anything for now. If you look at all these ones here, okay, look at this one here. This was a break of structure after a sweep of liquidity here. This was the first break of structure actually here. Okay, so this was the break of structure. You could have used this breaker block, but it should have failed. Okay, would have taken a loss here. I would have used this, but I would have taken a loss here before price dishes back to the upside again. Okay, so I'd have had 3 wins and what 1 loss in all this move. And you can see this is 1:10, 1:7, 1:10. Okay, so you can see that's over 1:27 risk to reward ratio. So that's to tell you the advantage of understanding your drawn liquidity, your key level zones, and all. Now you look at, let's now come back before I end this video. Look at something carefully. This price broke off this my key level. Once it breaks out of this my key level, I cancel it. Where did price now go back to react for this move here? Price has taken out external range now. Where am I now heading to? You see that I focus on the previous charts, and you can see that we have a V-shaped key level here, which is like an order block zone also. Okay, is a V-shaped key level. V-shape broke and then broke, retested, and price still retested again, and then price held here. Okay, so price got to this zone here. I wait to see how price reacts here. What am I looking for now? I am now looking for a reversal concept to start selling. Where am I selling to? Since price has taken out what external range, I am now looking for price to come back into what internal range liquidity. So I can start marking other blocks like this. This is where I'm looking at one. This I'll wait for price to give me a reversal concept before I start buying back again to take out what external range. So if it fails, I'll mark out the next point of interest where it can react from. If it fails, I'll mark out the next point of interest where it can react from. Okay. So when price got here, that's the same thing I did. Scale down to my 30 minutes time frame, and then you see me trade in line with it. Okay. So that's if you've gotten your reversal concept, to guys. Remember, if you've gotten your reversal concept, my chart. If you've gotten your reversal concept, okay. So look at this one here. Okay, so this one here, you can see price taps this zone, give us a market structure shift. Reversal concept confirmed. This is it, MSS. And then after this market structure shift right here, okay, this was a valid inducement. Would have said, oh, we want to work with what? A breaker block zone, right? So would have said we'll work with either this breaker block here, but there was a break of structure here. Okay, before this one here, there was also a break of structure here, but I'm not interested in this. This is the major one, this is internal. So I would have marked here like this zone here, and this would have been my entry, and I would have lost this trade. Simple as that. There's no, I would have lost this trade because my stop loss would have been around here. So here, like, let me use here, around here. I would have lost this trade on the breaker block setup. Okay, it's easy as that. There's no two ways about it. But after losing this trade, let's see at the end of the day, I've taken -1% here, right? Good. Then what happened again? Price push comes back, gave me another reversal concept here, but I did not get my inducement, so I'm not interested in this setup. Okay. Then what do I look for again? I wait again to see sweep of liquidity, a break of structure. Oh, look at this again, guys. Sweep of liquidity, a break of structure. After this break of structure, you can see that there was an inducement here. Let me indicate that there was an inducement here. Now, this inducement now did not mitigate this breaker block, so this breaker block is still valid. But mind you, we have tiny break of structures inside here. You can see them on your line chart. There was a break of structure before this one. Okay, so this was the first break of structure. This one here was my first break of structure. This one was actually my first break of structure, and that will be my entry. That breaker block zone will be my entry there. So, and that's where you see me have my entry zone there. That's why you see that price comes back there, tap me in, and push down. Why didn't I use this one? This one too is correct, but I would have been in more drawdown than using the first break of structure. So identifying the first break of structure is very, very crucial, very, very important. Okay, so my stop loss would have been above here like this. And if I'd used this one, I might probably, okay, very close to being stopped out if I had used this one. Okay, and then that's how I got this trade here. That's how you've gotten this trade here. Okay, so it's giving you another 1:10-ish. Okay, so if you look at this one again too, what? Break of structure. But look at something again. Look at something again, very crucial. Price broke structure aggressively with this candle, mitigated this one, is validating this breaker block. Also mitigated this one, is validating this breaker block. So this one is even simple for you to trade with. You use this what order block zone here. Okay, you use that order block zone. That's the breaker block zone that you can work with. This is an order block that in the lower time frame looks like a breaker block. Okay, so you use that zone there, and then price taps you in. Stop loss, you can take your stop loss above this body here, and then price drops back down again. Okay, so now look at this one here. We had a sweep of liquidity, a break of structure again. Now, if you look at it, there are internal break of structures. There are structures that we're not seeing, that but price are actually breaking structure. This break. Which one is the first one? This one here is the first break of structure. You can see price pushed up, broke this first structure here. This one here, and that will be my entry zone. You can see came very close to it, but it didn't tap me in. For this type of one, right, I would have worked with the week here. I would have worked with the week here, and I believe I would have been tapped in on this trade because the body is I have more body than week there that I can work with here. So I would have worked with it, and sometimes I might have used the body and I would have missed the trade. Okay, so that's how you take another trade here. Okay, till I get back to what this drawn liquidity. So you can see I keep on selling, 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 selling. Okay, that's how you keep on doing it. So let me show you guys my current trade on that's on JP225. So this is the trade I took on JP225. Okay, so you can see it here. So this trade was based on invalidation, a new invalidation. Okay, there was no other visible order block, and I used what's the new invalidation level. This order block was mitigated. Okay, but I used the new invalidation, and then that's it. So normally I'm supposed to have taken profit here because today is Friday, but I'm still looking at price coming back to the zone. Price doesn't come back to the zone. If it pushes back down a little bit, I'll close my position and I'll call it a day. Okay, but naturally, this is the drawn liquidity you're supposed to take a profit on. Okay, you're supposed to take a profit from here. Okay, so that's it, guys. That's just it, guys. So very, very important for us to understand this concept on drawn liquidity, how to mark out your key level. I hope this video was helpful enough. Thank you so much. Have a wonderful day.